Okay, so let's start question 5. So question 5 is based on special journals. So it's about purchases and cash payments journals, dance widgets. So guys, you're given the opening balances of each supplier. So these balances represent the amount owing to each supplier. So they owe Desmond $18,000, Larry $15,000, Sam $22,000, and Ben $23,000. Okay. So you're given subsidiary ledger accounts. So keep in mind, the subsidiary ledger accounts are outside the general ledger, and the subsidiary ledger accounts are maintained for control purposes. So that would eliminate excess detail from the general ledger account. In this case, it's accounts payable. Okay, so what we need to do is we need to complete the general ledger account for accounts payable, which we call the accounts payable control account. And then we need to complete subsidiary ledger accounts for each supplier. And after we post these transactions to subsidiary ledger accounts and control accounts, the sum of subsidiary ledger balances of these suppliers must equal to the closing balance of accounts payable. Okay, let's start. Okay, so let me start with the control account first. Accounts payable control account is the main account. So accounts payable is a liability account, which means the opening balance is credit. Okay, what's the date? Okay, just check. First, so it's the month of July, 1st of July. And you write the opening balance. Guys, what's the opening balance? Okay, so we can easily get the opening balance by taking the sum of these opening balances of each supplier. So 18,000, 15,000, 22 and 23, you would get 45, 60 and 78. So that's the opening balance of accounts payable, which is 78,000. Okay, and then we check for credit purchases, and the business made $148,000 worth of credit purchases. So when credit purchases are made, you debit purchases and credit accounts payable. So where do you write it? You write it on the credit side. At the end of the month, you write purchases, which is, how much is it? 148,000. 148,000. Okay. And then we check for cash payments. We need to work out total cash payments. And they made $81,000. They paid $81,000 to their suppliers. So you should debit. Record these on the debit side of accounts payable. We have cash at bank. $81,000. Okay, so 81,000, and then we look for any purchase returns. Okay, on 7th of July, Dan's widgets return Larry $3,000 worth of supplies purchased on 6th of July. Okay, so that is a purchase return. When is it again? 7th of July. Okay. 7, you write purchase returns. How much is it? Okay, $3,000. Okay, so 31st of July, you record. Oh, it's not aligned properly. Okay, right. Balance carried down. You can get the totals first. This is 226,000. And this is 226,000. Okay, sorry, this is wrong because you don't record balance carried down here. Balance carried down is recorded here. 31,700. Balance carried down. What do you get? Okay, so how much we need to add? 226 minus 84. You need to add 142,000. And that is balance brought down as well. Balance brought down. It's 142,000. Okay, so the ending balances of each supplier, or the sum of ending balances for each supplier, should equal to 142,000. Okay, so let's complete these subsidiary ledger accounts. So let me start with Desmond. Does Desmond have opening balance? Yes, he does. 17. Don't need to worry about post reference. It's $18,000 for Desmond. And check whether they purchased from Desmond. Yep, they did on 4th of July. So guys, all credit purchases are recorded in the purchase journal. So you write PJ as posting reference. Since it's accounts payable, it's a credit entry, 25,000. And that brings the balance to 43,000. Okay, did they make any payments to Desmond? No, nothing. They haven't made any payments. So Desmond's closing balance is 43,000. Okay, next we have Larry. Does Larry have opening balance? Yes, he does. Opening balance of Larry is 15,000, and you record that in the balance column. Did they purchase from Larry? Yes, they did. You write PJ, and that's a credit entry for 30,000. That makes Larry's balance 45,000. They also return goods back to Larry on the 7th of July. So all purchase returns are recorded in this general journal. You write GJ, and that is $3,000. That makes Larry's closing balance 42,000. Not closing balance, the balance after the purchase return, 42,000. They also made a payment to Larry. They made a $23,000 payment on the 11th of July, and all payments are recorded in the cash payments journal. We write CPJ. That is 23,000. So Larry's closing balance is 19,000. Okay, let's move on to the next supplier, Sam. So Sam has an opening balance. Sam's opening balance is 22,000. Did they purchase from Sam? Yes, they did. 8th of July. Purchases journal, 31,000. That brings Sam's balance to 53. Did they make a cash payment to Sam? Yes, they have. On 12th of 7. Your ICPJ. How much did they pay? Yep, they paid 29,000. That brings the balance to 24,000. Let's move on to the next supplier, Ben. Okay, so Ben also has opening balance, which is 23,000. Did they purchase from Ben? Yep, 12th of 7. Oh, Investors. PJ is a posting reference. They purchased from Ben. They purchased $27,000 worth of goods. Brings the balance to $50,000. And they also made a payment to Ben on the 14th. Gonna write CPJ, which is 14,000. That brings the balance to 36,000. Okay, that's Ben. Jade. So Jade is a new supplier. Jade does not have opening balance. So they purchased from Jade on the 14th. Right, PJ 35,000. They also made a payment to Jade on the 18th. Right, CPJ, that is 15,000. That brings the balance down to 20,000. Okay, so that's Jade's closing balance. All right, let's prepare the schedule of accounts payable. Okay, let's start with our first supplier, which is Desmond. Desmond's closing balance is 43. All right, Desmond. At 43. Larry's closing balance is 19. Sam's closing balance is 24. Ben's closing balance is 36. Last but not least, we have Jade, 20,000. And this must equal to 142. Let's see. 43 plus 1962 plus 24, 86 plus 36, 122 plus 20, 142. There you go. All right, so let me cover question 7 in the next video.